Are you considering converting your primary residence into a rental? Hi and hello, and thank you so much for tuning in. And if you are new, welcome to my channel. My name is Preeti Rao and I am both a real estate and a mortgage broker for close to 20 years. In today's video, we're going to talk about the things you need to consider when you're going to take your primary residence and turn it into a rental property. But before we go into that, you know the drill. Make sure to like, share, subscribe, and tap that bell icon. It gets me motivated to keep you up to date with everything real estate. Now, as with any investment, the first thing I suggest is that you talk to an accountant as to what will this new investment property do to your tax implications. Find out and make sure it's the right thing for you. Also, you need to make sure that you have lived up to the expectations of living in that property for the amount of time that the lender expects you to before you rent it out. If you have not met the time period, you could be committing loan fraud, and they could call the loan all due and payable. So please be aware of that. For example, if you have a 5-year mortgage and the bank is advised that this is your principal home, then for 5 years that home should be your principal home. If the banks were to find out that it's not, then that could potentially put your entire mortgage in jeopardy. Second, you do need to change your insurance policy from a homeowner occupied insurance policy to a rental property. If you do not change it, you will need to understand and remember that they may not pay the claims if a tenant does any damage to the property. So you want to make sure that it's covered properly. Third, if it's a condo, you need to check with your condo guidelines. Do they have stipulations regarding rental properties? Are they allowing them? Also, if you have to refinance your home to pull equity out to buy a second primary residence that you want to move into, then be sure that the lender is aware that the property will be utilized as a rental property so that you're not committing any kind of loan fraud. Now let's talk about property management. Do you need one or not? That depends on how far you are living from the actual property. It's something that I would highly suggest, but it's up to you. It's your choice. See, they will end up taking around 8 to 10% of your rental income, and in turn, they are vetting each and every applicant. They will run their credit check, they will do the lease process, they will complete the leasing process for you, they will handle any kind of repairs through their service providers list. Of course, you have to pay for that, but they will handle it and taking care of getting those people out of the property if the time arises. They will help you with cleaning the property each time the tenant moves out. Now, they hold your security deposit for you, and at the end of the year, they will give you a breakdown of your rental property for tax purposes. So they do a lot of work that you would have to be doing on your own. Now, if you are considering doing it by yourself, that's great too. But you need to be aware that you cannot commingle all your funds. If you're converting it into a rental property, have a separate bank account where the mortgage goes out and the security deposit and the rent comes in. So when you take the security deposit from the tenant, keep it in that separate account. It needs to stay there until the end of the lease period. And then, of course, depending on the repairs that might need to happen, you would return the balance of that to the tenant as per the agreement. But you need to have it separate, and just make sure that you read up on all the necessary laws and that you need to stay intact with and follow. So be sure that you're well informed. The next thing you need to look at is that you got to run the numbers and figure out what the cost of this new loan will be once your principal home is converted into a rental property, the insurance of the property, management costs, and so on. And the last thing that I would always advise my clients, get an appraisal done from the day it becomes a rental property. Because when the time comes for you to sell that property, you need to notify CRA that it's been my principal home all this time, and this date on, it's been a rental. So always get an appraisal done so you know that as of this date, it's now a rental property and this was the current value at that particular time. You don't want to go back 5 years or 10 years later to then argue with CRA on what the actual value of the property was. But I would still suggest talk to your accountant first. So if this is something that you're thinking would work for you or that you'd like to consider, feel free to reach out to me. I can answer any questions you have. Now, while it may seem really easy to take your primary residence and turn it into a rental, there are some things to consider to make sure that you protect yourself and you protect the property. So I hope that you found this video useful, and if you have any questions or want any kind of clarifications, please don't hesitate to call me. We'll start a conversation and we'll start to figure out whether or not there might be a solution for whatever it is you're trying to accomplish. If you still don't know who I am, just go check my rating on Google and read my client reviews. Till then, take care. And if you found value or liked this video and would like to see more content, click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, and the bell icon so you don't miss any of my future videos. Thank you so much for watching. And don't forget to call me because I hold the key that opens the door to your dream home.